Hello and welcome to Benzinga Pro's weekly updates, Trading the Ratings, June 25th, 2012.
Hey Zingers, this is Ilir from Benzinga, and our market update comes to you on a Monday rather than the usual Friday. Last week was very active for us. We took 13 trades between Monday and Thursday, and we sat Friday out. As a reminder, we buy stocks that are newly initiated or upgraded to buy, overweight, or outperformed by analysts. We sell or go short on stocks that are newly initiated or downgraded with a sell, market underperform, or underweight rating. On the left of my screen, you have Benzinga Professional, the real-time institutional newsfeed that gives you these ratings in real time, hours ahead of market open. On the left, I have my trading journal spreadsheet. While it's not too practical to talk about our trades one by one, I wanted to just point out a couple of things on how we select our trades each day. As you may know from our previous videos, there are as many as 25 trade candidates every morning for us, up to 25 stocks that have a new bullish or bearish rating. How do we pick which ones to trade? Well, we look at several factors. For starters, we look at where the stock has been this year so far. For example, a new bullish rating that may have more meaning on a stock that is trading nearer to the lows of the year than near the highs. Basically, we make a judgment call on how much upside is left on the table after this newest rating on the stock. Also, some analysts may upgrade a stock to buy or downgrade a stock to sell just to catch up to the rest of the analyst field. We want to avoid having such a rating as a trigger for trading, which is why we stress out time and again that we should find out where the analyst sentiment has been on a particular stock, which is immediately possible just by doing a simple ticker search on Benzinga Pro. So looking at where the stock has been on the year tends to filter out ratings that are either a catch-up of the analyst with regard to the rest of the field, or basically is a rating which in which the upside has already elapsed, the opportunity is has already passed on to make a sizable profit on. What else do we look at? We look at the analysts themselves. Often analysts will change a whole bunch of ratings as part of their rating revision for an industry or a sector. Let's say an analyst upgrades a whole bunch of banking stocks, to buy from hold based on macro developments. We would try to avoid these signals and rather focus on stock-specific catalysts for the upgrade. When these rating upgrades come in groups, then chances are, even though they may move, that move is not necessarily guaranteed as part of our statistical correlation we have found out. One more quick note on our exits here. There are two ways we exit trades: when we take a profit at a specific target, or when we get stopped out on a 5% stop, which we enforce very strictly. We have no choice on the latter, obviously, but we do manage our targets pretty subjectively. We've certainly hung around for a fat target, if you will, but we won't have any qualms about taking an intraday profit of 3 to 5%. So while we like to hang around for a 10 or even 20% of price appreciation, we will have no problem whatsoever of taking 3 to 5% intraday. It is small money in terms of dollars, especially on our position size, which maxes out at $1,000 per stock. But if you trade often enough, these targets will accumulate into some pretty decent returns. Also, quick exits like these allow someone who has a limited trading capital to jump on new stocks, to jump when new opportunities open with more flexibility. A quick final note here on our results. Our aggregate gross return was 4.5% this week, which means that our average exit was at 4.1% across our 13 positions this week. We added $645 in profit, which brings our year-to-date P&L to $2,147. After commission costs come out, since we started doing this exercise, that leaves us with a net $1,807 in profit. Considering that our maximum capital invested never exceeded $10,000, our to-date performance in net terms is just over 18%. That's basically since May 21st. I believe that compares favorably with the S&P 500. Those were my comments for this week. I remind you that you too can have our ratings in real time. Whether you want to trade your own signals among these ratings that you'd get in real time, or whether you want to just test out our theory, or maybe just come up with a theory or a strategy of your own. For any questions, feel free to email me at ilir@benzingapro.com. Also, you can check out my author page at benzinga.com/users/Ilir-Shkurti, SHKURTI. There I summarize all of our rating signals and their performance if they were all to be traded. It's an insightful exercise on the tendency of rating changes to forecast intraday price movements. So that might make for some good readings if you're not yet ready to embark on a Benzinga Professional real-time experience. So that was it from me, guys. Cheers all till next week when we have our new update.